Hello and welcome to another analysis. So today I'll do something which deviates from what I normally do. Right. So usually I use Fibonacci and Elliott wave. So today we will deviate a bit, and I will not talk about Elliott wave, but I will talk about trend lines, support and resistance, and Fibonacci retracement and extension. So I'll be using the K225. Right. So this is CFD from Oanda. Okay, so without further ado, let's go into this. Okay, so there are good trend lines and there are bad trend lines, and there are also multiple trend lines. Okay, so now when you look at this chart, how should we draw the trend line? So the very first one that we need to see is from this low, right? Because we start from here. Okay, you can go all the way behind, but that would be too long, right? Since a 10 years kind of trend line usually is not that ideal for trading. So let's look at this. Right, this is the low made in March 2020, right, where we have this crash. So we start this trend line over here, and then we start drawing and trying to match a point which is here, right? So this is the January 2023. And then we see where it will stops. So around here. So over here, you see that we have 2 points over here, and that the recent crash down here, right, in August itself, stopped. It actually breached a bit before coming back up. Okay, so this is our first trend line. So this I would call the major one. Okay, or the longer term trend line. Next, we look at intermediate term trend line. So from this point, which is Jan 2023, let's draw another trend line, and we will try to see whether we can get a best fit. Now this itself, you can see it's not a very good trend line. Why? Because it touches 2 points that are very close to each other, and then after that you don't really see much of a, it just deviates too much. Okay, so this is not a good point, and let's shift this point, the starting point here. Okay, let's shift this starting point here, and then we start to move up. This will look at a better trend line because the 2 points are further apart, and to this breaking, right, is slightly more symmetrical. Let's change the color of this, right, intermediate trend line. Now let's look and see whether we have a third trend line. So this will be more of a near-term one. So from end October 2023, let's try to draw another one. Now this shorter term one is actually a much better trend line, right? You can see that it's either I touch this point, which is in January 2024, or I go to this point, which is 17 June. So the over here, actually we can what we call the least distance, right, from most of it, right, and where there's a break. So I will choose this trend line over here. I mean this point, which is actually closer to this also. So now let me change this color. So this is our short-term trend line. Now, uh, you may ask, what's the point of drawing all this trend line, right? So the first reason is you want to know where is your uh, support, because now we are drawing support trend line. The second reason is when there is a break, right? So it's kind of like, if break, what is the target? So in the traditional technical analysis, what you have is actually what we call the measuring rule. And today I'll talk about the measuring rule. So what is the measuring rule? Right? It means that from the break of the trend line to the previous peak, you should expect one-to-one kind of a target. So from here to this break of this trend line, you're expecting this move down to 35,221, around there, right? So over here, if you look at this, right, if let's say we are at the, if here is our right side of the chart, it means we're at this break of the trend line at this point. Where should we expect? So from this, you see that there is a, well, we just now we draw 35,221. And if we need to see whether this is a good support, we just need to find whether previously there are other support here. So you can see over here there is this support zone, which is over here. This is very close to this one, right? Maybe not close enough. One is around here, right? So this is actually another support. But this general region will, I would say, is actually called the support zone, right? Over here is actually the support. This entire region is a support zone. Of course, in from hindsight of what happened, we know that it broke through. But if you are short and you need a profit target, this is where, in the more traditional technical analysis, this is where you will take the profit. Or if you are more conservative, you will take somewhere before this. Now, if we look at this chart itself again, notice that this one-to-one measurement is actually also pretty close to the next trend line, which is the intermediate blue trend line, right? So if we are on the right side of the chart again, what would you expect how this will move when this thing breaks, right? Especially when you are moving over here. Let's bring this chart down to the hourly chart, right? So you are here, you enter a short, and it move on here and here, continue, right? Assuming you still hold this position. Now, what is interesting is at this point, right? Maybe at this point in time, let's say you are here, 2nd August on a Friday. How would you expect this to move? Now, ignore all these movement, and if let's say you are here, what happens is that you will expect this one, right? This when should you expect this target to hit? Is actually when you see this the intersection here. So you would not actually expect this thing to move so fast now. So maybe the trajectory that that you expect, right, will be somewhere like this. Of course, when this thing starts moving down so fast, right, you will manage your expectations, right? But at the very start, when you are trying to do this expectation analysis, right, you will expect this to move maybe closer to this, how it will move, especially when you're at this point, right, where there is a retracement, right? And if you are still holding to this position, then you will not expect this crash here. You will expect this to kind of move down like this, right? So it will drag this movement down, not only in terms of the length but also in terms of the time, right? So why is this important is, sometimes if you are doing derivatives where there is a expiry date, like an option, right? This trend line actually allows tells you that maybe your option should be further away, further dated if you want to have this target. Now, obviously, because this, when you are here and it crashes down already, you will have to manage your expectation that it may go even lower and faster, right? But that's besides the point, because at this point in time, you do not actually know how it moves, right? I mean, if you are using Elliott wave, you will know that this will be wave 3, which I have discussed in my video on how I expect S&P 500 to crash, right? So but we are not discussing Elliott wave today. So the traditional technical analysis, this is how you expect this, right? So back to this trend line again. Now, like I say, why are trend lines important, right? Now, since we have this ready, you will also notice that this break itself, right? If let's say now we are talking about the break of the blue line, then where are we now? Is that if you look at this, you will then expect this to move down to at least 27,271. Okay. This is a one-to-one measurement, right? But you also know that there is this trend line over here, right, which is quite an important one. And coupled with this trend line, right, there's also another important one, which is this support over here. This is an important support, right? Why? Because we have used this as a start of of our trend line, and also as the second point in another trend line. So practically, you will not expect this break of this trend line, right, to go all the way down to 27,271. You will be using this horizontal line and also this line, and expect that you actually, because this is also another, let me just talk about this concept of support zone instead of support price, right? So this entire region, right, is actually a support zone over here, right? This entire region is a support zone. So what happens is that because this is within the support zone, you actually expect it to stop at around 30,820, somewhere around there, right? We don't usually go into too precise, right? And you and there is this round number here, which is 31,000. So when you are looking at this, when you're on the right side of the chart over here, right, and you break this trend line, you will definitely do the conservative one, then say that you will stop around here, and you will set your target around 31,000, right? Just to be more conservative, right? Even though the real support is probably around um 3,300 around here, right? Or you can just set it at this trend line itself, right? So this is the importance of trend line and using these measuring rules, right, to see where this will go. Now, next I want to talk about using Fibonacci retracement and extension, right? So now this we have this break over here, right, and we have this move up. So Fibonacci extension itself is useful when you think that this is a trend, and you what you actually want to do is that you want to know where will this go, right? So if let's say it's already started to break down, right? So at this point in time when it breaks down, what you will do is you actually extend this over here, and you'll see one what is the this one-to-one target is, right? This at this point, referring to this point when it break down, and let's say you are trading a breakout. Where is this target, right? For those of you who are more familiar with Elliott wave, right? You will look for 1.618 at least, and this is here. And why this is a good um, target is because other than this Fibonacci extension reaching this around 30,950, there is the purple trend line that we're looking at, coupled with this support zone. So this will then be your target for where Nikkei 225 will actually drop to. So this is the Fibonacci extension. Now, let's say now that we are here, we are at this point in time, and we want to know where is this retracement going to be? Where will it stop? How will we do this? Right now, so Fibonacci retracement is actually good for using to do for this. Now, if we look at this amount, when this one, right? Uh, Let me just clear this out first. Okay, you actually have uh these few levels to look at, and over here, since we have already breached the 0.382, right? That means that the next target is 36,335, right? Somewhere around here. And why is this a good target? Is also because you actually have another support turn resistance over here, right? And this is what uh, all chartists look for, which is a confluence of support and resistance. So over here you have this amount, you have these two, which tells you that the target. Let me change this to hourly time frame. Right, you have these two that tells you that I'm looking at the retracement of around 36,335. Right, so this confluence is actually a very nice things for um, technical analysis, right? So what else can we look at other than this, right? So now you have two, and you're trying to increase your confidence on where this will be, right? Then once again, you may try to use Fibonacci extension again, right? Let's try it. So we know that this is, so I'm using a bit of Elliott wave over here. That this is kind of like the first corrective wave, and then I want to know where this will be. So I'm trying to look for a good spot to point this, right? So using this as a first wave, first corrective wave A, this tells me that this is, if it's a one-to-one, right, for a C wave, it will be around 37,100. This itself is also a good resistance, but it's actually a secondary target. That means a second target if this level breach, right? So I will not use this, right? And then we try to find whether there are other targets we can use. Right, knowing that this is the first wave, then now we use this one, which is the start of the wave C. Now I might expect that wave C will be a three wave or so. So let's say I use this, and then I try to bring down to the bottom here. Do I see anything? No, right? Because there is no convergence. Then I push this up. Now this is interesting because now I have this convergence here, which gives me three level of resistance. Right, out of these three level of resistance, one is tangible resistance, one is the intangible one, which is the Fibonacci extension, and one is somewhere in between, right? Which is, I would say, a semi tangible resistance, which is from this retracement itself. Okay, so so over here, let me just emphasize that this extension in orange is actually a secondary, that means it's not so important um, resistance, right? Because this is just aiding, whether you just need to find whether there are more more analysis to support your case. Now, but this is interesting in the sense that it tells me how should I plot my um alert wave, right? So yeah, since I'm over here, I will just talk a bit on this alert wave, right? So it tells me actually that this, how this wave is actually, this is A B C, and then I have another, this is not too clear at this moment, right? Because I may need to go into this lower time frame, right? Right. So this is actually how um the Elliott wave is going to be, right? So I have this A B, and I will expect this to be a C. And the interesting thing about this C is that you unfold in five wave, which will be, we should look something like this: one, two, three, 4 and 5. Right, so this is where I think Nikkei 225 is going to be, right? At least this is where if I'm expecting this to be just a retracement before coming down again, this is where I would expect the entire thing will reverse again. So now let's go back and look at the big picture again. Now we have a lot of analysis over here, which is making this entire chart look very cluttered, especially on the daily, right? But we can see over here that okay, let's remove those. That's not important. Like this is not important, right? And we know now that this is our target to enter a short. And how when will we um, reach this target? Well, I expect that because these moves are so strong, right? And if I go down to the 5 minutes again, right? This move itself actually is just within this trading session. So I'll actually expect Nikkei 225 to actually hit this target today itself, right? And if you look at how I draw this, right, you know that within the next uh, hour or so, right, definitely before the close of Nikkei session today, I will expect this um, to move to the target, right? So that's it for this analysis. Thank you for watching. Good luck for your trading. Thank you.